Welcome to our tax and accounting channel. Today we are going to discuss 7 tax questions to ask when getting divorced. I'm Gary.Massey. I'm a CPA and the owner of a tax and accounting firm focused on the needs of small businesses and small business owners. I help taxpayers to save taxes and stay out of IRS trouble. Question number 1. What if all of my tax returns have not been filed? Well, the divorce court is going to want you to get all your returns filed, either to tie up loose ends or to determine the exact income and expense numbers that will be used for alimony and child support issues. One of the key questions to ask if you have not yet filed divorce is, should you file married filing joint or married filing separately? The important thing to know is that with married filing joint, both you and your spouse are jointly liable for the tax debt. If you file separately, that is not the case. However, the tax itself is generally going to be lower if you are filing joint as compared to married filing separately. So the key question to ask yourself is it going to be worth filing with the married filing separate status, even though you will pay a little bit more in tax, but you will not be jointly liable? I would say that often the answer is going to be yes. It's better to file separately in that case. What if you don't know if your spouse has filed tax returns? Or what if you don't know what the income numbers are? Well, one thing you can do is ask your CPA to get your IRS transcripts. We do that all the time for our clients, and the transcripts will show what the missing tax returns are, and you can also get what's called a wage and income transcript, which will show the history of all of your 1099 income and all of your W-2s and other matters relating to your tax returns over the past several years. Question number 2, how will the tax responsibilities be divided? One thing you need to know is if you filed a joint tax return while you were married, as I said before, you are both equally responsible for the tax. The IRS will go after either party for unpaid taxes. If your divorce decree says that either the husband or the wife is responsible for the taxes, that is not binding on the IRS. They will go after either party. And this is where innocent spouse relief comes into play. I will be discussing this in more detail in a later video. But keep in mind that the IRS does provide for innocent spouse relief, which addresses the situation where one spouse claims that they had no knowledge of the income activities of the other spouse and should not be held liable. Question number 3, what if I don't trust the previously filed returns and I don't like what they say and I don't want to be held liable for them? Well, one thing you can do is, if you can get your spouse to agree, you can amend the returns. Question number 4, what if I don't trust my current accountant? For example, let's say he plays golf with my ex. Well, in that case, you may want to get a new accountant, someone who you can trust, who you can be sure is independent and will represent your interests. What if the tax returns that have been filed in the past show substantial tax debt or substantial penalties? This we find is often the straw that broke the camel's back in marriages where there are financial stresses, and that may even be why the couple is breaking up to begin with. So one thing you need to know is if there are substantial taxes or penalties, there are ways to deal with it. You can negotiate with the IRS. For example, you can ask for an offer in compromise, an installment agreement. You can get currently non-collectible status, or you can take advantage of the penalty abatement rules. Question number 6, can we sell marital property that has a tax lien on it? Absolutely, you can. The IRS will be happy to work with you to discharge or subordinate the tax lien that is on the house so that you can sell it and pay off the tax. The IRS would much rather that you sell the house and be able to use part of the proceeds to pay off the taxes rather than having you stuck with a house that you can't sell and the taxes remain unpaid. And then finally, question number 7, are there any negotiating points related to taxes that I should keep in mind when dealing with my spouse? The key thing to know is that you or your accountant needs to run a tax projection to show the after-tax cost of a number of financial matters relating to your divorce. Number 1, alimony. Alimony is no longer taxable to the recipient and no longer deductible to the payee. In your projection, it's going to show what that after-tax cost is. And then which spouse is going to claim the children. While children no longer provide a dependency exemption to the taxpayer, there are credits, and those are important to calculate. There are child credits. Those can be worth up to about $2,000 per child. There are earned income tax credits, and this could be significant to a non-income earning spouse. And then there's also head of household filing status. You want to run a projection that shows what this is going to be worth to you, and you can take that information and go into negotiation with that. I hope you have found this video to be useful. Be sure to give it a thumbs up. We appreciate that, and subscribe to our channel and leave your comments below. If you or someone you know needs more personalized attention, feel free to reach out to me by clicking on the link to our website below or by sending me an email. You can also call my office and ask to speak with me personally. I will do my very best to be of assistance to you. For now, I wish you all the best. See you next time.